Hello and welcome to Forex.Academy. In this particular webinar, we will be assessing active scalping as an effective trading strategy. Now, before we do so, please consult the following disclaimer. There is, of course, risk involved, inherent risk when trading the financial markets, so do be aware. And we'll start by discussing the strategy objectives of this particular trading strategy, active scalping. It involves actively trading the markets as new information becomes available. So it's focused on 5-minute, 10 minutes or 15-minute candles. Some scalpers do, of course, focus on 1-minute price action as well, and that is worth noting. So you're looking to trade short time periods, getting in and out of the markets. To profit from short-term volatility, as I said, getting in and out of the markets as prices fluctuate. So particularly an asset class like the Forex markets, where they're always trading up and down, they're fluctuating in price change all the time. You're trying to get in and out of those markets, perhaps gather 10 pips here, 15 pips there, or if it's a monetary exposure, €5, 10 euros, 20 euros here and there. To disregard long time horizons and trade how the market is reacting in real time. So you're looking at the price action as new information becomes available to that markets in the 5-minute candles. For example, you look to trade the structure of those 5-minute candles, perhaps for, as I said, 20, 30 pip moves, and getting in and out of the market, actively trading the markets as they move and react to real-time news. And you're looking to profit from a large sample of daily or weekly trading activity. So as opposed to long-term time horizons or long-term strategy objectives, you will, of course, look to actively scalp the market, which means you may have, over the course of one particular week, you may have 100 trades. Of course, you'll have perhaps 30, 40, 50 losers, or maybe more, but you're aiming to profit over the long distribution of the large distribution of sample trades over the course of that day or the week. So let's look at this strategy in practice here. We have a few trades open here, and the first thing I'll notice that we are trading different asset classes. Okay, so let's go through with a little analysis here just to see what we are trading. We're trading the Nasdaq, and we have a little chart flow on the right hand side. We can trade the Nasdaq here, the New Zealand dollar against the US dollar, the France 40, that's the equity index, the cable market, the pound against the US dollar, Nasdaq 100, and the US WTI crude oil market. So good selection of scalps there across 6 different markets. And generally a scalper will have his trading screen something like this here, because you're looking to look at opportunity in different markets and spot movement in markets to be able to avail of that price action movement. So effectively what you can see here is a couple of trades. We have 6 trades on the board, and effectively you're going to have winning and losing positions, open positions as well in profit, and open positions in minus as well. And effectively what you're looking to do is book in profit across a large sample of trades. So like this example here, this trader has 6 trades. We have just over 4 euros on the table, 21 euros on the table, 36 cents on the table, minus 263, minus 1674, and minus 706. So throughout those samples, there's some winning and losing positions currently open, and the total value is positive. So that's how you make your money over a large sample of trades. Again, in terms of your risk objectives, it's very important you don't over compensate for one particular trade. Let's say this trade in the middle here, perhaps at 4% risk, while the others are all 1% risk. You can see how obviously that might not be a good idea. If that trade becomes a loser, it turns around, and then effectively you're taking too much risk over the sample of trades. So you look to remain objective and try and trade as such. So let's go through some of these trades here. As I said, he's got 6 different markets, this trader, looking for profit opportunities. So he has shorted this market here, and he's currently onside. That's showing him some profit to the natural gas, 426 profit. He's bought this market here, I assume, from a high break around these prices here, and it's continuing to trade up to new highs. So that's a good trade, a long entry there, and that's 2114 profit. The short entry is here. Effectively, the market traded down. He didn't take profit on the trade, and now it's at scratch. So effectively, the French index is at 36 cents, so we're a scratch or break even almost on that trade. The long entry here to the upside didn't really show any momentum. Almost got stopped out here with these lows, and now we're still at minus, and this trade is the cable markets, who are at minus 263. And then of course we have our Nasdaq 100, the equity index here. We've actually taken a short entry here around the low of this market, and the market's just reversing and actually in a minus position here. So it is an expensive market to trade actually, and it's minus 1674. I assume it's around 20 pips offside there. And then the last market, of course, we have the US WTI crude oil market, where we've actually bought the market here. Again, it's a little cheaper to trade than on NASDAQ, and you can see that it's jumped up here, gapped up and continued to trade to the upside. That looks like a good trade. We're €7 onside. But the overall aim or objective of a scalper is to make profit over a sample of trades. If that's the case, you're going to know you're going to have losers through the course of the day and through the course of the week. So that's fine. This is the objective here, overall profit objective through a large sample of scalp trades. Let's move across to another trading example here. We have a little thought in our heads as a trader. Perhaps there's some fundamental analysis coming into the market. Let's say I want to buy the euro after some fundamental news flow, and I want to know which is the best market to trade. Well, this is what you can do in terms of scalping as well, guys. So we have 6 different markets here in front. Now, if you can look closely, what are they? They're all euro pairs, okay? So I'll just underline, we have the euro against the dollar here. We have the euro against the pound there. We have the euro against the Swiss franc there. We have the euro New Zealand dollar, the euro CAD, and the euro Japanese yen. Okay, so 6 different euro pairs across different majors. Now, effectively, we try and answer the question by looking for scalping opportunity. We know that the euro is moving, and we're looking for that opportunity, which is the best market to trade. So we'll look to position ourselves as such. So you can see we have 4 question marks there where we're not really sure. We're just observing price action. Why is that the case? Well, if we're looking to get long the euro, again, the euro is always quoted here across these pairs and across the Forex markets as the base currency relative to its second quote currency, okay? So that means if the market trades up, this is euro strength. So effectively, we see a large move to the downside. That has retraced in this market, and now we're continuing to new highs. That hasn't fully retraced the move here to the downside. You can see we still are below nominal levels at this price here. Then you can see the trend in the euro Swiss franc is very strong, and there doesn't seem to be too much volatility in terms of the pullback there. The euro New Zealand dollar is actually trading down to the downside, so we don't want to buy that market. It looks weaker. Perhaps there's more strength in the New Zealand dollar today during this trading period than the euro. The euro CAD, again, it's a little bullish, but it's just flatlining across medium-term averages there through the price action. And again, there's a lot of volatility to the upside and downside here, but the medium price action is around here, and that's certainly where we're trading now. So there's nothing too significant. So what we've actually done here is look for strength. We're looking to buy the euro, and we can see clearly with the charts that this is the best opportunity in terms of trending, and this is the second best opportunity perhaps in terms of that clear trend from the move. So effectively, if we're looking to trade the euro, we could look to get long euro US dollar and euro Swiss franc to follow this momentum just in the short term for the best opportunity scalps. So you can see how we've used our technical skills there as a scalper, not just to get involved willy-nilly in all of these markets, but to look for the best opportunity to actually trade such a decision. And if that's the case, we'll get those trades off, we can mitigate risk on the trades, and then we'll look for opportunities. Perhaps we'll take profit in a very short space of time. More generally, that's what you're looking to do as a scalper. You'd probably be in a trade for 5, 10, 15 minutes, 1 hour, I would say, at a maximum in terms of trying to find that price movement and profit. So you're looking to get in and out, actively involved in trading the volatility of these markets. And effectively, if we were to take 2 long positions in these markets, we would be in the 2 best opportunistic trades, trying to follow that short-term momentum. So that's what we're trying to do as technical traders as well. So there's a little complexity to the scalping strategy here. Let's focus on strategy implementation then. The implementation is based on total discretion from the individual trader, total discretion. So there's no set rules that apply in terms of that technical analysis where you always have a one-to-one risk reward. You're reading what's happening to the price action, you're getting in, and in terms of your stop loss, you might not simply place it. You'll simply have an idea that you don't want to lose 3 or 4 or 5 euro on the trade, or perhaps 20 euros on the trade, depending on the market you're looking to trade, with a profit target in sight. The ability to manage risk and book in profit in the short term is paramount to success. So not only are you looking to get involved actively in terms of mitigating risk, you're looking to buy a market. If it moves up 20 ticks, you'll grab that profit, you move on to the next market, you'll start to scalp, get in and out there looking for active profit potential. Traders' skills rely on the ability to effectively read the price action, so there is a heightened level of skill to scalping, I would say, than other trading strategies. It is quite a skill to be very profitable over the long run, and some of the best traders that I know, of course, are very proficient scalpers. The focus will be on daily pip monetary exposure, and again, that's what you're trying to do. You're trying to trade a sample of trades over the course of the day. You don't necessarily want to have a profit objective of making €100 in one trade. You're looking to make 20 here, 30 here, €10 loser there, €20 loser there, 30 here, actively involved, and collect those profitable trades over the level of performance through those sample trades. The key principles to this trading strategy, active scalping: short-term profit targets in line with expectations. It's very important to keep your expectations in line with what you're looking for. If there's no volatility in the market, perhaps you shouldn't trade it. If you are trading a low volatility market, perhaps you're only looking for 10, 15 pips. So keep those profit targets in line with expectations to what the market is doing in the short term, adapting to the most recent changes in price action and the ability to assess what is happening now in the market. What is happening now? And just some food for thought, guys. Those traders who are active scalpers will always have a Forex calendar up to see CPI figures, unemployment figures, potential news flow, FOMC, or real economic data flow that will affect the markets on the trading day. As I said, effective discretionary risk management. So it is all about your own choice to enter and exit the markets. And one main disadvantage then as such is that many traders do find it hard to keep that discipline in the short term. If you're able to master the discipline and develop the skills as a trader, then you can be a very good scalper indeed. But do bear in mind that discipline is the key in terms of your discretion entering the markets and trading via an active scalping trading strategy. So that brings us to the end of this short webinar discussing active scalping as an effective trading strategy. Thank you so much for joining us here at Forex.Academy. We'll see you next time. Bye for now.